Did you know that the Calgary real estate market is down 3.3% from the highs that we saw in July 2024? That is a decrease of $20,000. We are on a trajectory of slowing down, going right through the holiday season, through the winter, all the way to spring 2025. But are we going to stay at these lows, or are we going to bounce back in 2025? And that's a really hot topic right now. There's a lot of different things that are happening in this market that we need to watch out for. Business confidence in Alberta in general is optimistic. We're seeing a lot of people have some optimism when it comes to the Alberta economy. You can see that the year-to-date oil production in Alberta is steadily increasing every single year. We're seeing expansions in pipelines, and we're seeing some policies that are being put in place provincially to try to get as much out as possible. Now, we have federal elections in Canada that we need to watch for. We have federal elections down in the States, which could cause some waves for Alberta. Could go both ways. Are we going to see the Keystone XL pipeline continue on? Are we going to see massive tariffs on our oil and gas? Well, we need to watch out, because that's going to either affect positively or negatively the Alberta, and more importantly, the Calgary real estate market. The unemployment rate in Calgary, or in Alberta right now, is 7.3. We are above national average, as we usually are, but you can see that we are in that relative zone that we were in pre-pandemic. So yes, we have increased. Yes, there has been some massive population growth in Canada and in Alberta. So it will be interesting to see where that settles down. It's nice to see it drop. I wasn't sure if it was going to hit 8. It did fall, which is great. But let's see what happens after the holiday season as things start to wind down again and people get laid off from those holiday positions. So my name's Adam Fyfe, your Calgary realtor. If you're looking at getting into the market, it is very important to set up a game plan. I say this every single time. My Zoom link is in the calendar. Go ahead and book a call with me. I promise I'm pretty easy to talk to. We want to go over all things Calgary real estate, all things your personal situation, and how we can best guide you through that. If you want to know what your home is valued at, home prices have fallen. We want to know what your home is valued at in this day market. Go ahead, put it in. It's an instant momentaneous home evaluation, super slick product. It's me and me that looks at it. So if you want any questions, go ahead, put it in, reach out, and I'm more than happy to help. So let's get into this. Now, we'll kind of jump back here a little bit. So looking at November to November, sales are actually up from last year. So we actually saw an increase in sales. New listings are up by 4.5%, which is also nothing too crazy, but it's an increase nonetheless. Look at the inventory and look at the months of supply. Inventory is up 45%. We had over 4,000 homes left over at the end of the month, and months of supply is now at 2.42, which is still considered a seller's market, but it is very quickly going to more balanced conditions. A lot of those savvy buyers out there are definitely soaking up those deals, allowing for better opportunities to be presented. Some people are going to wait it out to see how the interest rates affect certain things. But right now in this market, it is definitely more balanced than what it has been in the last couple of years. So if you want to read this, go ahead, pause the video. I am not offended if you want to skip to the next chapter, or you can listen to my storytelling. Supply on the rise, but not across all price ranges. As we transition into winter, Calgary's housing market is following typical seasonal trends, with activity slowing compared to the fall. However, year-over-year demand remains relatively strong. In November, increased sales in detached, semi-detached, and row homes offset a decline in apartment condo sales. The almost 1,800 sales for November mirrored last year's levels and remained 20% higher than long-term trends for the month. So we're still seeing a lot of activity in the Calgary real estate market. The significant shift lies in supply. Inventory levels rose to 4,352 units in November, a notable increase from the 3,000 units reported last year. 3,000 units that were left over at the end of the market was ridiculously tight. There was virtually nothing that you could select from. 3,000 units in a city of 1.6 million people is not much at all. Despite the recent gains, inventory levels remain below long-term trends for the month. Housing supply has been a challenge over the past several years due to the sustained rise in population. Rising new home construction has bolstered supply in rental, new home, and resale ownership markets. However, supply improvements vary significantly by location, price range, and property type. So like I mentioned in that beginning statement, where you want to make sure that you have a good understanding of what you're getting into, this is why it's so important to set up those Zoom calls to have that explanation about what it is and what location, what price points, what is actually active, because there are still some quadrants and some property types are seeing increases, and we'll touch on that in a bit. The months of supply have increased to over 2 months, representing a shift away from the extremely low levels seen earlier this year and in the past 3 Novembers, which reported under 2 months of supply. While these more balanced conditions are promising for a potential buyer, many market segments still favor the seller. So it's not the same everywhere. Improved supply options have tempered the pace of price growth. Year-over-year gains range from nearly 7% for row homes to 9% for apartment-style units. The total residential benchmark price is only $587,900, reflecting a year-over-year increase of just under 4%. This slower growth reflects a shift towards more affordable row and apartment-style units. Seasonally adjusted prices have remained stable over the past 4 months, despite the unadjusted prices trending down in line with seasonal patterns. Let's repeat that. Seasonal adjusted prices have remained stable over the past 4 months, despite unadjusted prices trending down in line with seasonal patterns. So it's very important that you look at, there's obviously seasonality. Every single year we see price decreases. It's not uncommon for us to see some sort of slowdown going into the holiday season. So how much of a slowdown is it going to occur over the holiday season, and is it going to prolong through the spring? Are we going to see a lot more listings come to the market next year, really adding into that inventory level, because the actual movement of the market is still relatively strong? There's still a lot of people buying up Calgary real estate. There's just a lot more options now. And obviously the market is slowing down and there is less people getting into the market, but there's still options coming to the market, which is causing the inventory to increase. Okay, so let's continue to look here. Now, the total residential benchmark price is $587,900. That's actually down $4,600 from last month, but it's still up $15,000 from last year. So that increase of $15,000 is actually quite low. It's not something that I've seen in a long time, and I'll touch on that in a second, but it's down $4,600 from last year. So let's remember that there are benchmark attributes in every single benchmark price. And I have the benchmark attributes connected in a link in the description. So you can actually go click the link, it's public. You can see detached, semi-detached, townhouse, and apartment. And then each individual quadrant has their own attributes. So when you look at the microeconomic breakdown, at least what I call it, and you see that there's a property type and then there's a quadrant, there's a price point there. You want to overlap that for the actual attributes themselves to make sure that you have a general understanding of what it is that you're getting into. The total residential composite, right, the 587,000, this price here is correlated with total residential composite right here. So these are the attributes that you would get a $587,000 home. Very quick off the top, 2,000 build, 1,200 square feet of upgrade. Okay, 3 bed, it looks like about a 4 bath, 3 bath, and stuff like that. So go ahead and overlap that if you're curious. Now, this is quite fascinating. We're seeing a lot of decreases in the price point, right? If you look at the sales, obviously the sales have trended down. The inventory luckily has trended down as well. So there's not as much inventory left on the market. Like when we saw this number in September, I was a little bit concerned in a sense, thinking that we're going to see a wild Christmas holiday where we're going to see a lot of inventory, but it did soak it up a little bit. You can see the increase in sales, a decrease of inventory, and then the decrease of sales, a decrease of inventory, but there was a decrease of listings, which offset that. Nonetheless, we're still seeing price decreases. So this is the same information, just in a numerical value. Biggest things I really want to concentrate on here, days on market, right? The average days on market now for a property in Calgary, total residential, so all properties combined, is 37 days, right? That is longer than almost everything that we saw last year, minus January. January 2023, we had 42 days, right? Are we going to see 42 days again? Probably. I would imagine in December and January, we're probably going to get above 40. There's no surprises there for me. You can see that like I said before, the sales have decreased. The new listings actually did increase. I think I told you that they decreased. My apologies, they actually increased. The inventory did decrease dramatically, which is great to see. Lots of homes were pulled from the market. We saw a decrease in price, a decrease in median, and then a decrease in average. So when you start to look at the benchmark price here in November, you can actually see we're pretty much all the way back to February price points, right? When you look at this price point here, 587,000, basically all the way back to February, right? Because you have that 582, 592, pretty crazy. We've dropped all the way back. We went up and then we came down. So let's start to dig into this just a little bit more here. I'm gonna make this a little bit bigger. Now, this chart is quite fascinating because this just shows, year over year price percentage change as well as months of supply. The biggest thing I want to concentrate on is this red bar here. So this red bar is year over year price growth. You can see that in Q4 and Q1 of last year and this year, that we were at around 10% year over year. That was our peak that we saw in the last 12 months. We were all the way up to about 18% in 2022. Now, in 2023, we did drop down right close to 1 to 2% year over year price growth. It didn't get into the negatives, but it got really close down to the 0% range. I would imagine we're probably going to see something similar going right into the holiday season and probably into April, maybe March, depending on how fast things kick off in the new year. Depends how much the interest rates decrease, depends how many people try and sell their property over the winter months and just desperate and want to get things gone. I don't know if we're going to hit negative. I don't think we will in the total residential segment, but I could be wrong. We could get a dump of new listings that come on the market and really just push over that inventory and just drag that price right down. So let's actually look at the market here and let's see if it's still open for me, because I actually haven't opened this up in a second. So if we actually open this here, this is the MLS, right? And this is where it's so important for us to realize what is actually happening in this market. So if we look at the detached market, right? And this is just to show some of you folks out there of how fast things are moving, right? If we looked at this a couple of months ago, or more or less 4 or 5 months ago, a lot of these homes would have been sold within the first few days, right? So I have this currently listed as listing contract date. So when it came on the market, it came on the market today, right? If we scroll all the way down here, you can see that there was one that sold relatively fast within 2 days, but that's pretty unique, right? 1.2 sold for just over 1.3, not too much of an increase, 2%. Right, you scroll down here, look at all these things that are sitting. 3 days, you've got a couple here, right? Detached homes, 580, 69, 628, 549, I can't read apparently. 4s and 4s, so a pretty affordable product minus this 850, right? Scroll all the way down, look at all these active, look at all these actives. A couple more pendings here, oddly enough, going down, a couple pendings here in the 5 day, a couple pendings here, a couple solds, but a lot of homes are sitting on the market. If we were to switch this over to the more affordable options like townhouses, right? We can switch this over here, we can scroll down and just see how fast things are actually moving, right? You can see that there's one that's pending, but a lot of things are sitting, a lot of green there. Now, why do I bring this up? If you are going on the market, you are a seller and you are going on the market, you have to price it correctly. If you're a buyer, take your time. Look at the options that are now available to you. Scrape the internet, look at realtor.ca, look at the sites like this, and really just take your time in finding different opportunities. Unconditional offers don't really seem to exist anymore. But with that being said, if the home is priced correctly and it's a very aggressive marketing campaign, then absolutely it could work. But you need to be careful as to what you're getting into because this market is definitely slowing down. So I bring this up just to show you a little bit about how much things have slowed. So let's look at total sales because yes, things have slowed in the last 3 months, but when you start to talk about the activity in general, year to date, the sales are actually in par, very close to in alignment with what we were last year, our super hot year that Calgary saw, one of the hottest years on record minus 2022. We are very close to sales numbers. So the activity in Calgary is still very intense. If we scroll down here, you can see sales by price range year to date to November. You can see that this 7 to a million price point, has seen a huge increase in activity. Million plus has seen a welcoming activity increase for a lot of those luxury buyers. You know, the 200,000s are non-existent. The 300,000s are slowing down. Look at how crazy the 400,000s have slowed down. The affordable product in Calgary is still hard to come by, right? It is increased. A lot of prices have increased here, but it is very hard to find those affordable options in Calgary. So year to date, very wild to see the decrease in that specific market because now you're more or less tapping into condos or less expensive townhouses where 400,000, 5 years ago, you could buy a detached home in Calgary, right? Pretty nuts. So let's continue. Year-to-date new listings, right? This is, again, you see that increase from last year. This is why we're starting to see a little bit more slowdown in that second half. A lot more people have seen the increase in price point. A lot more people are getting into situations where they need to sell, right? The economy slowing down. Some people are losing their jobs. It's going to be very interesting to see how many people put their homes up for sale in the market and fluctuate the inventory levels, which are going to cause a decrease in price point. So breaking it down to just November, you can see that the sales, again, activity-wise, we are fairly close to last year's levels. We outpaced 2022, but not 2021. Back when homes were worth $400,000, we did not compete with that. But the demand in general in Calgary is still hot. The inventory and the amount of homes coming onto the market is a lot. So it's just not upkeeping with the amount of demand in this market, okay? Total inventory, right? We can see this here. Total inventory, the amount of homes left over at the end of the month. We are seeing a lot more options. We are seeing a lot more options for people to come and pick, which is why those prices are falling, because now people have an option. They have a room to negotiate on that price point, driving that down. Okay, so I really hope I'm hitting this home here. I really hope that I'm showing you that the Calgary real estate market is still relatively hot, but we just have a lot more options, right? We just have a lot more things to choose from, and we're probably going to continue to see a lot more things to choose from. We got to watch the economy. So if you want to read what the Calgary Real Estate Board has written about the individual markets themselves, go ahead, pause the video, watch this or read through these. I will upload the individual property type videos in the coming week, but you can go ahead and watch that here. Now, let's start to break this down, right? We've got detached, semi-detached, row, apartment. We got lots of different property types here. What time am I at? I'm pretty high. And you can see that a lot or all of the property types have actually seen decreases from the previous month. Detached, down 38. Semi-detached, down 19. Apartments, down 39. And then townhouses, down 23, right? So we're seeing decreases all across the board. Given time constraints, I'm going to skip this just because I've rambled on a little bit too long. Want to pause that, look at the September numbers, look at the year-to-date numbers. Some pretty interesting changes there, especially when you look at like, the actual sales year over year for apartments are actually down for the month of November, and the new listings are luckily down as well. But if you look at sales, again, actual sales year to date, we're down from last year in the apartment sector. So the apartment sector is slowing down in terms of the activity. So the demand in general is still hot, but the apartment sector is actually dragging it down. Okay. Now, months of supply, very, very important metric to know. And I'm going to try to bust through this here. I do apologize because I feel like I'm getting rambling on here a little bit. So months of supply is super huge. Look at the apartments in Northeast Calgary. If you are trying to sell your apartment in Northeast Calgary right now, good luck. I know for an absolute fact, I worked with a couple investors this year, that when there was, I think, 3 projects that I was personally kind of involved with as a listing agent that dumped like 30-ish units, 20-ish units each on the market within 2-3 weeks, which absolutely blew up the Northeast. And this is, I've said this in years past, if you look back many years, apartments are so sketchy for that, because if 2 to 3 to 4 projects all close in the same year, the amount of inventory that gets brought onto the market is insane. And you can clearly see it here with over 6 months of supply, okay? If you look at the opposite scale, right, you can see that detached homes in Northwest are still at 1 month. You can see that semi-detached in Southeast and South. You can see that townhouses in South, Southwest, and Northwest are still in sellers' markets. Yes, we're seeing some price decreases, but for the most part, the seller still has a little bit of leverage because there's not a lot of inventory in that market. Now, if they price it ridiculous and then they have to drag and they're on the market a little bit longer and the price gets dragged down, that's a different story. But for the most part, you can see that there's still some there's some property sectors and some quadrants that have relatively fast markets. So, like mentioned before, if you want to know what your home is valued at, you can go ahead and put it in. The link is in the description. It is such a super cool tool that allows you an opportunity to know what your home value is every single month if you want to actually automate that and put it in here. Or again, you can just ask and I can provide you with some value. Now let's continue on. This is the microeconomic breakdown for the entire city. And I'm going to zoom in here a little bit, and it's a little bit choppy, so just cut me some slack. I see that the quality's not that great today, but look at all the red, right? Previous month, current month. You can see that detached homes in East Calgary saw a massive increase, $6,300. They saw a huge increase. 28 sales, 33 new listings, 84% sales and new listing ratio. They're still at 2 months of supply, but they're very affordable. $532,000 benchmark attribute for a detached home in East Calgary. So when you go and you're like, well, what does $532,000 get you? Well, you come over here, you go to the East Calgary, and you get a 1972 home, right? That's what that will get you. Now, if we look at on the opposite scale of things, a 2000 built, right, 30 years newer in West Calgary, you can see that it is a lot more expensive, $962. Prices in general are going to be higher in West Calgary, but the attributes are very different. So you can see that they did see a decrease, but I just wanted to point that out. So with that being said, look at these decreases, right? 7,000, 26, 65, 52, 49, 62. We're seeing some decreases. Going to the apartment sector, same thing. Going to the semi-detached sector, oddly enough, you can see East Calgary again with the increase in price point, right? Only 5 sales with 4 new listings for semi-detached. Very attractive for investors out there looking for good cash flowing properties. Semi-detached, and then the row townhouse apartment, you can see that City Center is actually doing quite well, right? About, what is that? Almost $3,000, over $3,000. $6,000 of increase in the last 2 months, right? They are obviously more expensive than anything else in the city, but they're still attractive for some people looking to purchase real estate in Calgary. Now, where are we at here? I'm not going to touch on that. I've already touched on that. We are very quickly going down to that 0%. This chart and this chart are actually the exact same. To be honest, this is just a little bit easier to read. Are we going to go down to that 0? I don't know. I don't think so. I really don't think so. I think that we're going to get quite close. We might dabble into like 1 to maybe 2 -%, but I just don't currently see it. I don't currently see us dipping down into the major negatives going into the new year. You can see that in 2022, this is one of the main reasons why I say this. In 2022, we had a pretty aggressive downturn market. When the interest rates increased at such a rapid rate, everyone thought that the market was going to slow down. And it did. It slowed down pretty dramatically. As soon as January hit, sorry, I'm going to zoom back in. Nope, that's the wrong slide. As soon as January hit, right here, we started taking off again. As soon as that new year turned around, January was absolutely on fire. So there's so many people that wanted to buy Calgary real estate that in early 2023, we saw an increase in activity. There are still so many people, in my personal opinion, that want to buy Calgary real estate. And I personally believe that we're going to see an influx in activity in Q1 and Q2 of 2023, pushing our price points back up. How high are we going to get? I'm not even going to guess, but I would imagine we're going to continue to increase in this market. Now, what I didn't do is I didn't talk about, because I'm already almost at like 25 minutes here, I didn't talk about a lot of things, but I want to start talking about these things in my videos, and I'm going to make this screen just a little bit bigger. Land transfer fees are now a thing in Calgary, believe it or not, in Alberta. If you don't know what that is, I will have this land transfer fee link in the description for you to go to. So the old tax that was in place, for every $100,000, you would pay $40 land transfer fee, something similar to you people from BC and Ontario. Now, with this new fee, that's gone up $60 per 100,000. So for every $100,000, you now have to pay a $100 fee, right? You can see that when you go to $200,000, it actually compounds, right? It went from $80 to $200, right? If we go up to 500,000 here, it went from 200 to 300 to 500. And then if you go all the way up to 800,000, it went from $320 to $800. So when you're getting into the market, please make sure to talk about this with your lawyer, with your realtor, because this is now a new closing cost that you need to consider. I will link this article, City TV or City News, just talking about it a little bit, but I encourage you to do your research. There's a lot of different things that I'm going to talk about in future videos. You know, months of residential resale housing inventory. The average for Canada is right around 4 months. We're still just above 2 months. We're quite low. We're still quite hot compared to the Canadian market. There's a lot of things that we need to consider, especially when you're looking at the tariffs and the oil and gas and all the issues that might be brought up from those in the future. This is a very hot topic right now. We all need to be very close in watching that, but I'll link this article. Higher year-over-year oil production, business optimism, and then we also saw a decrease in rent prices. We've seen actually a decrease every single month for the last like 3 or 4 months. So the market is slowing down. Is it going to slow down and is it going to crash and burn? I highly doubt it. I don't think the Calgary real estate market is going to absolutely crash and burn, but we do need to prepare ourselves for those corrections, right? If you're a seller looking to try to time the market, just be careful. Make sure that you're doing the research in your local community. If you're a buyer and you're looking at stepping into the market and you're waiting for the interest rate to fall, you know, I appreciate that. But talk to your mortgage broker, talk to a realtor, and at least get a plan in place as to if the right home comes on the market that you can live in for the rest of your life or for the next 5 to 20 years, buy it. So many people just wait for that perfect opportunity and then they allow these really beautiful homes to slip through their grasp by not even taking it seriously. Yes, the interest rates might come down a little bit. Yes, the prices might fall a little bit. But at the end of the day, if you find a home that you want to live in and it's in a community that you want to be in, go after it and actually make that move and go and make the decision to try and jump on that opportunity a little bit quicker, but finding that comfort in the lifestyle that you want to create. So my name's Adam Fyfe. This is a long video. If you have any questions, go ahead. All the links are in the description. Go ahead and reach out and see if I can do a banner here. You know, send me an email or shoot me a text message. More than happy to talk to anyone about anything. And yeah, we'll see you on the next one. Peace.